Right friends, welcome back to new series. This is IBPS PO interview, how to face banking questions. And here I would like to tell you 2-3 points. One is, please answer the questions with clarity. Second thing is, don't try to bluff. Third important point is, if you do not know the answer, frankly admit. And fourth important point is, there is every possibility that supplementary questions may be generated out of your answers. Whatever you are answering, make sure that you know the meaning of each and every word of your answer, right? So, let us look at some questions. Why do you go to bank? This is the pertinent question. Before that, some people may ask, what is the difference between bank and banking? Bank, you can say institution, banking is the operation. When you go to school, you will have opportunity for education. Like that, bank is institution, banking is the service. Otherwise, you can say financial service. And if you come back to this question, why do you go to bank? There are 3-4 reasons for us to go to the bank. You can answer straight away, I will go to the bank because I can save my money safely. If I keep money inside my house, there is every possibility of theft. I cannot sleep happily. That's why I will go to bank, to keep my money safely. Second important point is, it will create a saving habit. Third important point is, whatever money I save and I keep with bank, I will earn some interest. That is another point. Next point is, I will have a relation with the bank so that I can go to the bank for future credit needs. If I require loan sometime later, the equation with the bank is very important. So, these are the factors, and at the same time, my money, if I put it in the bank, is very much safe. Because of the reason, banks enjoy protection or insurance under DICGC. DICGC is the Deposit Insurance Credit Guarantee Corporation. If my bank collapses also, my money will be safe up to some extent. So, I will keep my money by earning interest with the bank. Second is, it will give rise to saving habit. Third important point is, I will earn some interest. Fourth, I will have good commercial relation with the bank. Fifth is, it is safe and secure, and I can sleep happily during night times. Because of the reason, my money will be safe with the bank. So, this way you can answer this question. And if you look at another question, you are planning to take gold loan, do you go to bank or non-banking financial company like Muthoot Finance? If you want to take a gold loan, you will have option. You can go to either bank or to some non-banking financial company. This Muthoot Finance, Manappuram Finance, these are all examples of non-banking financial companies. They exactly do what banks are doing in particular segment. If you look at Muthoot Finance, Manappuram Finance, these are the segments where gold loans are being given. So, if someone asks you whether you go to bank or NBFC, if opportunity comes, I will go to bank. Because of the reason, banking system is well regulated, and non-banking financial institutions or non-banking financial companies are not that well regulated, because money or the activities in the banking system are perfectly safe in our country. That's why if opportunity comes for any type of activity, I will prefer bank than non-banking financial companies. Look into the next one. What is the difference between public sector banks and private sector banks? And some people may ask you whether State Bank of India is a government bank or public sector bank, whether Bank of Baroda is a government bank or public sector bank. Your straightforward question is, these are all examples of public sector banks. They are not 100% owned by government. The government shareholding is more than 51%. Government is owning around 70%, 60% or 80% of these banking institutions. That's why they are called public sector banks. But if you look at the private sector banks, government may or may not have their ownership. If at all government has got ownership, definitely that is less than 50%. If you look at Axis Bank, government has got some ownership of around 11%. So, public sector bank means government's ownership is more than 51% or 51% or more, and private sector banks are majority shareholding owned by private. Government may or may not have shareholding. If at all government has got shareholding, definitely it is minority shareholding. Right? So, this way you can answer this question. So, some people will try to confuse you. What is the difference between government bank and public sector bank? Public sector bank is government's ownership is 51% or above, right? Look into the next one. What is the difference between commercial banks and cooperative banks? Commercial banks, the sole motto is profitability, or looking at it from commercial perspective. If a bank is established, the prime motto of commercial bank is to look at the profitability. It will act as a banking company. That will be for profit company. That means it is for generating profit. That is the main motto of a commercial bank. But if you look at cooperative bank, the main motto is benefit to the members than commercial operation. So, you can say the main motto of commercial bank is profit. Main motto of cooperative bank is mutual benefit to the members. And there are several other differences. If you look at commercial banks are basically on larger scale into wide range of operations, whereas the cooperative banks are on much lesser scale, and the scale of operations are normally limited to small value loans in rural areas and in urban areas, right? So, these are the major and fundamental difference, and there is lot of difference as far as regulation is concerned. If you look at the commercial banks, they are solely regulated by Reserve Bank of India. But if you look at the cooperative banking structure, they have multiple regulators we have discussed in various lectures. Look into the next one. What do you understand by nomination facility? I have discussed in my lectures in a detailed way, but still, how do you answer this question? Nomination facility means if X has opened a bank account and unfortunately X dies, then bank will have a dilemma whom to transfer that money. If X dies, the wife of X is logically the legal heir, but to avoid banks of all these botherations of a legal heir, who is the real successor to receive those monies, bank will ask for nomination. So, X will nominate Y. If something happens to X, the money will be transferred to Y automatically by the bank, and Y will hold the money in the capacity of a trustee, right? So, these things you have to answer, and answer with an example. That is the better way of giving any answer to practical questions like this. What are the problems faced by public sector banks? If this type of question is asked by the interview board, you should be ready to answer the question in such a way that it should not lead to any supplementary questions. If supplementary questions are asked, then you should be in a position to answer. The problems faced by public sector banks. First and the foremost problem is raise in gross non-performing assets. Immediately, interview board will ask you, what is the meaning of gross non-performing asset? If somebody has taken loan and he is not paying back, if he has not paid back for more than 90 days, it becomes a non-performing asset, or you can say bad loan. So, the biggest problem faced by the public sector banks is high non-performing assets. The second biggest problem faced by the public sector banks is CASA ratio is reducing, and immediately interview board will ask you, what is CASA ratio? CASA ratio is current account savings account ratio, that is the ratio of current account savings account to the total deposits. So, CASA ratio is reducing for public sector banks, because of which profitability is affected. Then third important point is technological upgradation. If we go to some internet banking site of some private sector bank, they are giving a lot many services, but public sector banks except State Bank of India are not able to upgrade their internet banking and other technological features in comparison with private sector banks. Probably you can answer in this way. And fourth and the last important point is customer service. The customer service provided by private sector banks is much superior in comparison to public sector banks. But if you look at the positive aspects of the public sector banks, the positive aspects are: one is in opening Pradhan Mantri Jan Dhan Yojana accounts, public sector banks have done great service to the nation. Second important point is private sector banks will look at the rich customers, whereas public sector banks look at poor customers also without any discrimination. Third is the reach of public sector banks is into rural areas. So, if you look at the inclusiveness of the country, public sector banks are doing extremely good service. So, you have to tell the problems faced by public sector banks. At the same time, the service given by public sector banks, if you compare it with private sector banks, please mention that, because if you look at inclusiveness of the country, if you look at the financial inclusion of the country, public sector banks are doing extremely good service. Right? Look into the next one. What do you understand by e-lobbies? Nowadays, you need not go to bank. You need not have any employee interaction. Lot many things are being undertaken with electronic way or with electronic lobbies. I can deposit money. I can withdraw money. At the same time, I can update my passbook also. So, several facilities are given in e-lobbies. I need not go to the bank. I will just go to e-lobby to get all these services, and I can apply for various loans also through e-lobbies in electronic form. So, I will go to e-lobby to ensure my services in the banking system. So, nowadays banks are going for e-lobbies in a big way. That way you can answer. Differentiate between No-Frill accounts, BSBDA and PMJDY accounts. Initially, Reserve Bank started with No-Frill account, zero balance account. Subsequently, Basic Savings Bank Deposit account. No-Frill account was renamed as Basic Savings Bank Deposit account. Subsequently, after the Narendra Modi government came to power, this Pradhan Mantri Jan Dhan Yojana was launched so as to take banking services to the doorstep of people in a massive way. These are zero balance accounts, and RuPay card is being given for each and every account holder, and these PMJDY accounts are the brainchild of the present government, and so far more than 20 crore accounts were opened under Pradhan Mantri Jan Dhan Yojana. All three are one and the same, maybe with the slight difference in operational guidelines. Otherwise, these three are zero balance accounts. The name got changed, first No-Frill accounts, then BSBDA, and now Pradhan Mantri Jan Dhan Yojana. Right friends, why KYC norms are important? This question is expected, and KYC means know your customer. Why KYC norms are important? That means there is a lot of black money in circulation in and around us, and that black money should not enter the legal channels of banking. The illegal money should not become legal. The illegal money should not be legalized by the banking system. So, with that in view, these KYC norms are brought, that is address proof, ID proof. Banks will make sure that I am so and so before opening the account, before making my transactions. So, with the KYC norms as well as permanent account number, black money can be curbed through the banking channels. That is the main purpose of Know Your Customer norms. What is the difference between check and DD? Check is issued by me, that is a drawer. I will write to my bank, that is a drawee bank, to pay my friend, that is payee. I will write the check, I am the drawer, and my bank, that is a drawee bank, will pay to my friend, that is check. I have money in my account, I have liberty to pay whatever way I want. For that purpose, check is used. Demand draft is, one bank is asking another bank to pay to some person, that is a demand draft. One bank is asking another bank to pay to the third person, that is demand draft. In demand draft, money is certain, but in check, I can give check even though balance is not there in my account. So if you look at it from that perspective, check is uncertain, demand draft is certain. Check is given by individuals like me, but demand draft is instruction by one bank branch to another bank or the branch of same bank to pay to the third person. That is demand draft, where the payment is certain. Check is specifically mentioned in Negotiable Instrument Act, whereas the demand draft is not mentioned in Negotiable Instrument Act. Look at the last point. What do you understand by CTS 2010? CTS 2010 is the system where check will not physically travel. If the check is presented in Delhi and the drawee branch is situated in Chennai, check will not physically travel. The image only will go. That is the CTS 2010 checks. Not only image, the second important point is duplication or fraudulent checks can be controlled with this CTS checks because of the reason they have several inbuilt security features. Right friends, so with this we can conclude this. I have just taken how to answer various questions in this module. We will present 5 modules in this way, and please do join for second module. Have a nice day. Thank you.